Housing crash? 2022 is not 2008. How to invest in a volatile real estate market. Brandon Gentili. Missing the macro. I've had many arguments over the last 12 years with bankers, lenders, etc., saying how the housing market is not going to crash because we fixed so many things after 2008. Dodd-Frank, all these insane federal acts that have cleaned the market up, etc. Now, granted, the lending market is different. There are more rules in place and regulation and red tape, and you can argue those things both ways, but they've tried to do things that are protecting the buyer, we'll say, and the lender. At the end of the day, again, we know federal centralized legislation is not the answer to capitalism, to free markets, and really to prices and a higher standard of living. That's the opposite of what we want. So this is really important. This is a very important blog here today because this is what people are missing for years. People that are in the industry missing it a lot. They can't see the forest from the trees, and that they miss what interconnected. Everything is interconnected. So I would always argue something to kind of jolt people out of their position and saying, oh yeah, the housing market is going to be destroyed. And they'd lose their mind, right? And once you do that, you have emotional control over somebody and they can't figure out what's going on. The cracks in the economy don't have anything to do with housing yet. And again, we're in the real estate industry. We've been in real estate for 10 years, really since the last crash. And towards the end of that is when we got into the real estate market, investing, helping people buy and sell, buying apartments, buying single-family homes, etc. And the cracks in the economy have nothing to do with housing yet. Housing is one of the market dominoes to fall as unemployment goes down and wealth is destroyed through demand destruction, as we've seen in the past 6 months. Housing will be collateral damage and billions of dollars will be lost. Rising rates have made housing payments shoot through the roof. That cannot last. If you look at charts and graphs, which I actually forgot to grab one in here, the housing payments are going through the roof because rates have doubled over the last 6 months, 9 months. So how does that affect the average person? That cannot go on much longer. And here's the debt clock in general. What do we think about the national debt? Do you think that's going to last? Do you think this will last forever? Do you think these numbers spinning up more and more and more? Do you think that's creating more wealth for people? Do you think that that average person is going to be able to afford housing much longer going forward? Going to buy more homes? Things are going to grind to a halt like they already are? And the Fed has told us they're going to, and maybe they do pivot at some point and drop rates down, which I think they will. But they have told us they're going to crush things much, much more. So get ready, buckle up. These crashes are not the same. They're going to start from different areas, like they usually do. But things rhyme. They don't repeat, they rhyme. And that will happen again. The demand destruction, what we've been seeing in the housing market, this wasn't caused from housing. So this in and of itself proves me right. This proves exactly what I've been saying for 10 years, and all the experts I argue with in this field, lenders, other real estate people that worked for massive companies, and thought they had it all pinned down because they were looking at things from how they happened in the past and not seeing the forest and the trees, not seeing the future, what was going to happen. So we've seen just now, this massive reset in real estate that hasn't even really begun yet, but this big lockup and prices starting to come back down. This reset is already happening. And it had nothing to do with real estate. There was zero to do with real estate. Yet it's happening from the outside and it dominoes its way into real estate. And real estate is just one of those huge asset classes that will immediately be affected by unemployment, by rising rates. And people don't see that and they don't understand that macro, all these things are interconnected. We have seen it in our own real estate firm. Like I mentioned, many of our clients have a hard time selling their homes in the past couple quarters. As far as investing goes, it's been hard for years to find great deals because of the printing of currency and the manipulation of interest rates. You have to spend dozens and dozens of man hours just to find one deal, countless dollars, marketing, researching, calling for phenomenal deals. And they're out there. It just takes a lot more work right now than it did, say, 10, 12 years ago in the crash. At some point, the market will clean itself out of all the excess currency printing in the system, and all asset classes will recalibrate, which will be great for the average person. It would be wonderful. We'll be buying tons and tons of real estate, tons of assets, because it's now reset and it's gone down 50%, 60%, 80%. Housing will be no different. We must not be myopic, thinking that housing is some stable platform of wealth. Housing is a place to live. It's shelter. It's the bottom of Maslow's hierarchy of needs. In reality, for most people, it's a liability on the balance sheet, as it's something they have to pay for each month. Only those who have rental properties producing positive cash flow can consider housing an asset. And how much longer will that last? Moratoriums, rent controls. That being said, again, with freezes, moratoriums on payments, and evictions, how much longer will real estate be considered an asset? If you're not getting paid by your renter, but your rent is still, or your mortgage is still needing to be paid, how long will that last? And again, rent control, them locking up rents, Well, that's going to make the landlords not want to put anything in the house or not be able to really afford any. That's the biggest thing. They won't be able to afford to put anything into their housing. So now you're going to have more and more projects created and more destruction of rental real estate and people's housing and their shelter because the government stepped in and said you can't raise rents. Well, now how are you going to pay for anything? How are you going to upkeep anything? How are you going to renovate it and make it better? You're not. This is what happens over and over again. This is history repeating over and over. Again, the deals will be available big time going forward in the coming years. Get ready. Now is the time to prepare, though. Again, deals can be found now. These deals are different. The markets are different. Deals will float to the surface big time going forward because people will not be able to stand this market. They've bought incorrectly. They've just got loose with their underwriting and what they're looking for just because they think everything's going to go up forever. People thought it in 05, 06, 07, 08. It's just going to go up forever. They're going to keep printing currency, don't fight the Fed, and then the bottom drops out. The same thing will happen again. Deals can be had now, like I said, but it takes a lot of effort in the mindset in here. It takes creativity to be able to see the deals. Most people think that the history will never happen again, and we have fixed the problems in the past. The economy can and will break in the same areas, but it doesn't have to, and those effects will cascade and reverberate throughout the economy and be felt by all. And again, here again is the money supply. So we showed the debt. Here's the currency printing of what we're doing in the balance sheet that we had before in the money supply. Just massive. Like, where do we think this goes? Like, who in their right mind thinks that this is a healthy scenario? I would love to meet that person. We certainly aren't in a 2008 type environment. Don't get yourself twisted. 2022 and beyond will be much worse. The Fed's balance sheet is 10 times larger than it was in 2008, meaning we have 10 times higher to fall. This might disturb some people, but the imminent everything bubble will crash and things will implode everywhere. Now, this might not happen in the dramatic effect we all think. It might be more of the whimper and not the bang, but it will transition. This monetary system is transitioning. That's where we talked about this many times. The BRICS countries, China, Russia, Bitcoin, that's all vying. It's all vying for monetary control and who's going to be the king on top of the hill. It might happen slowly over the coming years, and we may be all the frog in the boiling pot. CBDC, central bank digital currencies, the SPY coins, the Fed coin. Prices may continue to go up because inflation is so insanely high that you just become poorer and poorer. Look at the Venezuelan bolivar. If currency was really a measure of wealth, then those citizens in Venezuela would be among the wealthiest on earth. However, we know that's not the case. They're some of the poorest, if not the poorest on earth. So what is true wealth? Wealth is value creation, the goods and services. It's not pieces of paper. This is an alarming wake-up call for society hell-bent on more funny money, on more currency printing. And again, here we are. We have the federal debt, total, GDP, so the percentage of the debt compared to the GDP, what the output of the country is. And we were just going through the roof in the last 10 to 20 years. This is insanity. And we know historically, anytime you get above 80, 90% debt to GDP, game's over. Monetary system, reset, everything, wars. So we're well above that. We've been above that for, 10, 15 years? So we're well above that. We don't really output. We have very little output. Obviously, we have negative GDP growth now. We have very little output. We have massive currency printing, and that's why we see it up here at 130, 120, 125% of GDP. That's not good. Unsustainable. Cannot last, mathematically. How to prepare for 2022 and beyond personally. Prepare for the coming crisis not only in housing, but supply chains, empty shelves, energy blackouts, food scarcity, water scarcity, and most importantly, a scarcity of truth and reality. More importantly, that's a bigger epidemic. Now, how do we do this? Become resilient and independent by stacking up your pantry, stocking it, deep pantries, becoming energy independent as possible, generators, storing gas and solar, making sure your wealth is on hand through cash, gold, silver, Bitcoin, on your own cold storage wallet, etc. A lot of bank problems going on lately. I see a lot of people having bank issues, not being able to get cash out of the banks, being limited in what they can do. This is a preparation time. We have to get prepared now because things are coming, whether it's in the next couple months, next 6 months, or the next year, or next 5 years, 10 years, it's coming. It is coming. It is imminent. And we are going to live through this, and we must be prepared because the less we need to depend on other people or depend on government, the more freedom you have. Again, make sure you have as little counterparty risk as possible. Counterparty just means, if you have a deposit in a bank, the bank's your counterparty. So they can do whatever they want with it. They can bail in, they can scoop it out of your bank account and use it for whatever they want. That's a lot of the problems that are being done right now. That's the Dodd-Frank Act. That's one of those things they put in 10 years ago where bail-ins are okay, what they did in Cyprus. The banks can come in. When you give your money or your currency to a bank, legally it's not yours anymore. You give up the right to that money, currency, I should say. No one knows that. You give up your ownership of your currency. They can do whatever they want with it, and they can give it back to you whenever they want. You go to the bank a lot right now. If you go ask them for 5, 10 grand, good luck. They'll say, we don't have that. Sorry, set an appointment with us. Excuse me? It's mine. That's mine. Well, no, number one, currency is debt, so it doesn't, it's really not worth anything anyway. And number two, you gave up your right as soon as you gave it to the bank. So start understanding, buying it, putting your wealth in Bitcoin and putting it in cold storage, your own vault, maybe buying some gold and silver, putting it in your own vault, getting it hidden in different geographic locations. You can do that with gold and silver. You can do that with Bitcoin. All over the world, you can hide it. That's this game, guys. Let's go. The cat's out of the bag. Again, as you've seen, if someone wants you out of the system, you will be taken out of the system. We do not want counterparty risk. You must diversify and become resilient. Again, how do we invest in the real estate environment moving forward? Whether it's now and in the future, this is always a good plan for everything we do, especially right now. We have to be diligent. We have to be patient. We have to look for true deals. Look at thousands of deals. And as Robert Kiyosaki says, the 110-3-1 strategy. For every 100 deals you look at and you write offers on 10, you have 3 accepted offers, and you end up closing on 1. Most real estate is priced too high because of the unrealistic expectations sellers have. That's just a fact of life. The rent-to-value ratios are insanely high. Patience of virtue. And again, these are all things that we've done through experience as well. These are all things that I try to just talk about things I have experience on. I've read a lot and studied a lot of history, but these are things that we've actually seen the last crash, living through this one, what works, what doesn't, how we invest in real estate, how we buy stuff, and what has happened in the past and what is coming in the future, and being prepared. Our personal philosophy, our stoicism, our intellect, and understanding what it is we are doing and how we are doing it. Speaking from experience and also seeing the future and what's going to happen. Patience is a virtue, and that patience will pay off in spades in the coming years. So be careful investing right now. Make sure your numbers pencil in correctly and you underwrite deals very closely. Patience, patience, patience. There are deals to be found. Again, you just have to be careful and diligent. When the market does turn, there will be deals everywhere, and you'll be primed and ready to go when that does happen. So be careful in the current time and prepare yourself for what lies ahead. That ability to underwrite deals and do things properly the right way will serve you well now and into the future. And again, like I said, this is the strategy we use to underwrite deals, apartments, self-storage, etc. Increase your underwriting skills. And we're just getting into those areas, self-storage and stuff like that. We have not acquired any of those, but we've been looking at a lot, and a lot of them haven't worked. But you always got to be looking at deals and seeing what's going on. We started in the single-family world, and we've proven that process on a smaller scale, and we're scaling up to bigger things now as we go forward. Increase your underwriting skills. Sharpen your cap rates and determining the ROI, the return on investment that you want, and the price you're paying per door, etc. Make sure you're buying deals that are for cash flow and spit out money on day one. You do not want to be caught with your pants down and swimming with no clothes as the liquidity tide continues to move out and the rates continue to move up. If you are buying for appreciation in hopes to flip things, you're going to be sadly mistaken, and I bid you good luck. Make sure your due diligence checklists are put together and that you are prospecting and ready to jump into action when deals present themselves. You generally will be fighting against other buyers, so those that can be dialed in, those of us that can be dialed in and make decisions quickly and decisively can beat out others. Diligence and patience is the key of the day. And again, experience is going to come to you as you do this more and more, and you get better and better as you underwrite more deals and look at more deals. So that's kind of really the long and the short of how to flourish in this market, learning from 08. 08's not going to be the same. It's going to be much worse in the future going forward. The change of monetary systems, like people think this is, most people have no idea what's going on. Obviously, if we here on this blog and what we do in our videos, we know exactly what's going on. We have been studying this for years, for the entire decade. We know bad things are coming, and we know it's time to be prepared. And hopefully we've been preparing for years. And that's what we've been doing here, and our family, our friends, the people around us, getting people prepared for what is coming. But it's massive opportunity. Like when this crisis hits, it's massive opportunity going forward. That's why I said 2008 is not like 2022. 2022 and beyond here are going to be much worse, but it'll be greater opportunity, way greater opportunity than there was even 10 years ago for those that are ready. So stay strong. I appreciate you. If you got anything on this, please like and share, subscribe to the channel, and let us know what you didn't like. If you dislike it, great. That's awesome. Please, though, if you do, let us know what you didn't like so we can improve and get better and provide better education and entertainment for you. We look forward to seeing you in the next one. Please go check out other videos on deflation, inflation, and what this economy is doing right now and what it's going to do in the future here. This is incredibly, incredibly important, and I implore you to go do that. And again, we have the last couple we did about how to stop war, and some different ideas about these really big ideas that people they don't want to talk about. So go check those out. Let me know your thoughts are. And we appreciate your time and energy. It's the most important asset we have. I'll see you on the next one.